President of Administration with Business Volunteers Unlimited. We serve as the bridge between the business and the nonprofit communities in Northeast Ohio and work hard to provide timely, relevant information to our nonprofit partners. Today's webinar, What You Need to Know About PPP2, is on the minds of many of us as we navigate through this next round of potential funding to help sustain our organizations through these incredible challenges. As personally, as the finance person at BVU, I've spent a lot of time on PPP in the last year. It can be confusing, complicated, and just constantly changing. So HW&Co is here to help us understand what's coming and what to do to prepare in advance. So a couple housekeeping items and then we'll get to it. To ask questions during the webinar, please use the chat function at the bottom of your Zoom screen, or you can also unmute yourselves at different points throughout the session. We encourage you to keep your cameras on for a more interactive experience. We just love to see everyone's faces. The slide deck of recording will be available post-event. So we're really pleased to have with us today our presenter, Tony LaNassa of HW&Co. Tony is the managing principal of HW&Co's Columbus office. His practice focuses on accounting and audit requirements and business consulting for a number of industries, including nonprofits. Tony provides consulting services, including business plan reviews, evaluating and obtaining financing, strategic and business planning, internal controls, and performing operational and business office review analysis. In addition to his work with nonprofits, he has board experience with the local Chamber of Commerce at the Crohn's and Colitis Foundation of Central Ohio. He has more than 20 years of public accounting experience, and his community involvement. Tony's experience is a perfect match for helping us understand what's coming with PPP2. I personally reached out to Tony with questions I had on round one and again on round two. He was extremely knowledgeable and so helpful. So thank you, Tony.
Thank you, Denise. Appreciate the introduction. You know, Denise brings up all of this other stuff that I do. Well, probably for the last 10 months, it's just been PPP for the most part, and trying to help our clients and other businesses, you know, obtain some relief and some support, obviously, from the federal government and other jurisdictions. But I appreciate the opportunity from BVU to provide some information to all the members and others here on the Zoom call here. So HW&Co, hopefully you've heard of us, you know, just some information about us. One of the good things I did want to mention is on our website, you know, we do have a good resource center on our website. So there's a lot of timely information that's posted out there. So if there's anything that, you know, it's something that pops up that you're like, you know what, I may not understand this, or you heard from the SBA or another contact about some change, most likely it's going to be on our website. So you can always go to our website and take a look. And then, you know, obviously, as Denise said about questions, you know, feel free to try to ask questions. I'll try to get through all the content today. I'm sure there's going to be lots of questions coming up as well. So we'll do our best. For the most part, we'll talk about obviously the Paycheck Protection Program, right? That's what we're here for. I do want to mention the Employee Retention Credit as well. And you know, a lot of nonprofits say, well, it's a credit. Why do we even need to know about a credit? Well, the credit can be applied to payroll taxes. So not only, you know, most credits can be applied to income tax. Obviously, for the most part, nonprofits don't have income taxes. But for nonprofits, they can take advantage of this credit using, and just, you know, by using it to reduce their payroll taxes, which is good. So we'll talk about that. And then at the end, we'll talk about some other relief provisions, which would include that EIDL, which I mentioned a little earlier about. So some updates on PPP. You know, at this point right now, the SBA has only received about 30% of loans for forgiveness at this point. So, you know, obviously, you know, close to 70% at this point for borrowers have not applied for forgiveness through the SBA right now. They may have applied through their lender, but at this point, the SBA have not received those applications. So obviously, you're not the only business that hasn't applied at this point. it's probably a good thing. I know HW&Co has said that potentially you may want to wait a little bit just to see if there's other further guidance that comes out, which you'll see that there has been some guidance coming out that potentially helps the borrowers with the forgiveness process. So the question is, is it time to apply? Is it not time to apply? Well, it probably depends on your lender. Most businesses or most banks right now and lenders are accepting applications for the most part, especially PPP1, the original loan program. So you can, do you have all the support you need? You have to make sure you have all the support you need, information ready and available in case the lender, the bank asks for that information. So have that, everything that you apply for forgiveness, have it ready in case the lender does ask for it. Is the lender requiring it? Well, I've heard yes or no on some of these banks. Some of the larger banks are saying that they are requiring the first round forgiveness application to be applied and submitted before PPP2 can be applied for. Okay. So I've heard of a few banks doing that. I've heard other banks not requiring it. So the key is to call your bank up that you typically do business with and potentially you've done the first round with, and ask, are you requiring this? Do I need to apply for forgiveness before we apply for PPP2? And find out, what the lay of the land is for that. But I have heard that some banks are doing that, so you'll want to find that out. And then just the last question: do you want it off the books? I know banks want it off the books, right? They want to get paid by the SBA, so that's one thing is banks will probably push a lot of the borrowers to get this done, especially the first round done sooner rather than later. So, I think everyone probably knows, the information was released on all PPP1 borrowers back in December. So, information, names, the amount that was borrowed, all of that was released out. It's out in the public information now at this point. And a lot of the news organizations jumped on it and back in December. The one thing that you want to know about, if you have a loan of $2 million or more, and that includes affiliates as well. So if you have affiliates, and they're considered affiliates under the SBA rules, and you can get those rules right off of the SBA website. If you go on the website and Google search affiliate rules, they'll come up. If you do have affiliates or just one business that has more than $2 million of a loan or more, the SBA came out with these loan necessity questionnaires, and they're specific to for-profits and nonprofits. The form 3510 is the not-for-profit, the nonprofit borrower form, and it's extensive. It has lots of questions. It's digging into the details about liquidity, the necessity of the loan, things like that. So the one thing that we have not heard is these forms, we don't believe have been approved by the Office, the OMB, the Office Management of Budget. So we're not sure at this point if it's required to do it. Now, the SBA, I have heard some of my clients have received the forms from their lenders. So I don't know at this point, it's still kind of up in the air. And I think a lot of the focus by the SBA was getting this PPP2 round out and getting all the guidance out for that. So they haven't really focused on these loan necessity questionnaires. But I guess the recommendation is, if you have a loan over 2 million or more, you'll want to take a look at this questionnaire, review it, most likely start answering some of the questions. You'll probably want your legal counsel to take a look at it just to see how you're answering some of the questions. Make sure on the legal side the answers are appropriate. Hopefully it doesn't, some of the answers doesn't get anyone in trouble with the SBA, with the Treasury. But the one suggestion that the AICPA came out with was, instead of doing the form, can you do a narrative statement about back in April, May, what the uncertainty was, and how the economy was back then. No one knew what was going to happen, tomorrow, and not, let alone a month from then. So, can you do a narrative statement? Potentially, I think that would be something that you would want to talk to your lender about. The process for that is you would obviously submit your application for forgiveness, and then the lender is then supposed to send you this form to complete within 10 business days. So it doesn't give you much time. That's why if you are one of those that would qualify for this loan, you may want to take a look at the loan. You may want to look at the form now and kind of go through the process of understanding how you're going to answer those questions. Some of the items on the questionnaire, you can see, it talks about gross revenue comparisons. So it's asking about quarter 2 20, quarter 2 19, talks about revenue sources, talks about if your business was shut down or altered. So a lot of questions. It even talks about owner or officer compensation, more than $250,000. So it's really digging into the details here for sure. It also asks about other CARES money that you received. There's a lot of healthcare providers and other businesses that received a lot of other CARES money that you'll have to provide on this. So a lot of scrutiny for sure by the Treasury and the SBA. Currently the forms for forgiveness right now, there's 3 forms. So there's the 3508S form, which is loans 50 or less. And then there's the EZ form, which typically it's when you have no employees or you don't have any of those reductions of FTEs or salary and wages reductions. So that's what you would do there. You would complete this EZ form. And then there's a full form. There's going to be a 4th form that I'll get into in a little bit here as well. So the Appropriations Act. So this is the largest spending bill ever. So that's even more than the CARES Act back in 2020. And it provided $900 billion of stimulus to businesses and others. And we'll get into the kind of the details for that. And then obviously it was signed into law back in late December. So you can see all the detail here related to the $900 billion of relief. About a third of it, a little less than a third of it, is going to the Paycheck Protection Program. And then you can see all the other items, either individual checks and other programs that are in place under this bill. We talked about when it was signed into law. One of the key things here, you can kind of read through it, is today. Today is a big day. Today is a big day because the SBA opened up the applications for lenders to submit to the SBA. So at this point, all lenders, for the most part, can submit applications to the SBA. Previously, it was a select. It was more focused on certain lenders and potentially certain borrowers. But today is when it all opens. Now, I say that, and some banks aren't even ready for it. They're still trying to kind of get their portals ready, get them up and running. They may be waiting for additional guidance on certain things. So some banks aren't accepting. I know banks, I've gotten a few emails from banks saying that they are accepting today. So I guess the recommendation for that is if you call your lender and they tell you that they're not ready, and I guess the first thing is you qualify for the second round, which we'll talk about. You may want an alternative lender. So you may want to take a look to see if maybe you do banking with another bank, or you have a relationship with another bank potentially as an alternative, just in case the bank that you typically do business with is not ready, say in a week. So just something to fall back on, so you have an alternative bank or a lender that you can call up and ask that it's time, I'm ready to do this. The last day to apply for either draw is March 31 to 21. So it's obviously just the first quarter here of 21. Just like the prior original PPP, it goes fast. So if you do qualify, I would suggest getting in as soon as you can, having all the support ready for it, and then obviously talking to your bank to make sure that they're ready. So the one thing I wanted to mention here, because I've been reading a lot about this recently, is first time and potential second time borrowers. Could there be an issue here where, say you get the first round and it was less than 2 million, and you get a second round here, PPP2, and it puts you over in aggregate over 2 million? Could you have more scrutiny then by the Treasury? Could you be considered a borrower of 2 million or more? I don't believe there is clarifying guidance on that at this point. Plus the second round draw loan forgiveness forms are not even out yet. So we don't know if it's going to ask if, both loans are over 2 million. So I guess, what I'll say here is just make sure that you understand that this could be something where if you get over the 2 million in aggregate for the two loans, you may have a potential audit or review by the Treasury. And it's not going to, they potentially may not just look at just one loan, they may aggregate it together. So again, looking at your risk levels and so forth, I say to my clients, if you do everything right, you're keeping employees employed and paid, you're working through this pandemic, you have all your support, you understand the calculations that should be made, you should be fine. Are they going to scrutinize over the liquidity and how much liquid assets you have and endowments you have potentially? Well, it comes back to a lot of that's judgment, right? A lot of that could be reserves that you've been holding on for years and years and years. So, just think about that, before you apply for the second round, think about that. If you're going to go over 2 million, just, think about the negatives potentially that could play on with potentially having an audit or review by the SBA. But again, if you do everything right, I'd say, my opinion, you're fine with moving forward. So the first polling question here, just, did you receive a PPP1 loan? Just interested to see. I would assume, most everyone probably did that's listening to this, or potentially, you didn't, and you're thinking about this second round. We'll just give it another 10 seconds or so. So as expected, a good majority, almost 90% or so did receive the first round. Thanks, Molly. All right, so just some of the provisions in the Appropriations Act that relates to the original. So the first thing is, I would be remiss not to mention this. Now, I know it probably really doesn't apply to nonprofits, but I know there's a lot of board members and others that potentially have other businesses, for-profit businesses and so forth that are listening. The expenses that you use for forgiveness, so the payroll and things like that are qualifying expenses under the forgiveness, are now tax deductible. Previously, the IRS came out and said they're not tax deductible. And ultimately they would be taxable. But now under the Appropriations Act, they included that in the act, saying that the expenses that you're using for forgiveness are tax deductible, which is great for profits. Definitely. Simplified forgiveness for loans under $150,000. So with that, I would suggest if you do have a loan of 150 or less, you probably want to wait if you haven't applied for forgiveness yet, because there's going to be a new form coming out that's very simplified. So you'll probably want to wait for that form to come out. There's additional allowable funds that can be used for the forgiveness that we'll talk about. You may reapply. So if you did apply for the original loan and for some reason you gave it back because you're reading about some of the articles with the Treasury and liquidity and things like that, and you got nervous about it and you gave it back, well, you can reapply now under the second phase. Also, and I actually got a question from a client this morning on this, borrowers that got a loan, but then guidance changed after the fact, which meant that potentially they would get a higher loan. you can go back and modify the amount and get the extra amount of loan now. There's a process that you go through with your lender, and there's actually a procedural notice out on the SBA website for this thing. So I actually got a question from a client just on that, because they want to get extra money because they can get it now and they can do that, go through that process. And then they clarified, like this covered period. Initially it was just 8 or 24 weeks, but they clarified it saying that, well, it can be 8 up to 24 weeks. Now, even with the first loan, you can go up to 24 weeks, but on the application itself, you actually had to select either 8 or 24 weeks, but now it's kind of in between. And then the one good thing about the act here too, is it repealed the provision to reduce the PPP forgiveness by the EIDL advance you got. So up to that $10,000 EIDL advance, which is good. So now it repealed that. So you don't have to reduce your PPP forgiveness by the EIDL advance you got. Nothing crazy here. This is just on the deductibility. Kind of already mentioned that. Now, the last bullet point here is there's an IRS ruling that was issued on January 6th. So this is it's a link if you want to click on that. If you have actually a PDF of the slideshow, you can click on this and go directly to that revenue ruling if you want to read it. The simplified forgiveness. As I said, this form's not out yet. So they have a few weeks, SBA, to get this form out. It's a one-page form, just very minimal information that you have to include. And then ultimately you certify a few things and you submit it. So that's why I said earlier, if you have a loan 150 or less, you probably want to wait till this form comes out and then submit forgiveness to your lender. Some of the additional allowable expenses that you can use. So there's actually some good categories here, some broad categories that you can use expenses for forgiveness. So the first one is these are covered operational expenditures. And it really relates to businesses going remote or, like doing a virtual environment, HW&Co, we all went remote back in March. So at the time, we didn't do very much virtual meetings. We did some here or there, but not very much. So we actually had to purchase, Microsoft Teams at that time. And then, the cost for that and everything. It also talks about like other additional costs related to tracking some of the payroll that you're doing and the accounting that you're doing. So it's kind of a broad category here. So if you do plan to use other expenses like this, you'll want to kind of read through the details of the guidance for it. It also talked about covered property damage. So if you had damage related to vandalism or looting based on the public disturbances in 20, if it wasn't covered by insurance, you can include it now with the forgiveness. There's also like a broad category here called just supplier costs. So if a business purchases goods and it's considered essential to the operations, which I would think that most businesses that are purchasing goods, it's probably essential to business, to the operations itself. So it's a very broad category. Now there's one thing where there's a caveat here where you have to have either like a contract or an order or a purchase order before the covered period, or if it's perishable goods, then it would be either before or during your covered period. So you have to have something as far as a contract. Now it doesn't say a written contract. So it could be probably just, it could be just a verbal contract as well. But you'd have to have something in place before the covered period for the most part to get that expense able to be forgiven. Talks about the worker protection expenditures. So, again, like if there's a business that had to adapt to, government mandates and guidelines. So, there's some examples here, fast food restaurants and other restaurants having to do like, drive-through windows and things, or even expanding drive-through and all of that can go towards it. Physical barriers. Now, if you go to a restaurant, there's a lot of physical barriers up, the cost related to that now can be included. Any changes to like outdoor spaces and patios and things like that, based on the guidelines, can be included. So there's probably a lot of things that a lot of businesses have done to sustain themselves. So you'll want to take a look at that if you want to include some of these expenses. All right, the second polling question, was your PPP1 loan 150 or less? So this gets to that simplified loan application, loan forgiveness application.
Hey, Tony, we're having a trouble with this poll. We might not be able to launch it.
Okay.
Bear with me for 1 minute.
Not a huge deal. Again, if you do have a loan 150, if you haven't submitted loan forgiveness yet, you'll probably, I would suggest waiting at this point for that new form to come out, because it looks like, again, just very simplified. Looks like the poll's up. So Molly, any questions so far?
Yeah, we did. We got one from Janet first, and her question was, can we submit for forgiveness keyboards, mouses, and monitors given to staff for remote work?
Good question. I am not sure. So I think hardware, potentially, maybe not. Because I think it's going towards more software related that you're purchasing, and those costs related to that covered expenditures. So I would probably to be safe, I would say do not do that, just to be safe. So it doesn't disqualify some of your expenses. But if those expenses, if you do need to use those expenses to get full forgiveness, because maybe you didn't have all payroll related, all the payroll that you could, you'll probably, I would say, run that by your lender just to see what their thinking is, or maybe your CPA or your accountant that you work with, just to see what their thoughts are. So it looks like a good portion of you have the loans 150 or less. So see, again, see if you haven't applied yet, you may want to wait up for that.
Tony, we had one more question if you want me
Yep.
to.
Sure.
So Jennifer asked, would this cover things that were previously covered in grants, but that if this covered those, that funding would be able to, of said grant could be utilized for other needed things?
So the short answer is yes, but you can't, the major thing with all of this relief is they say you can't double dip with the relief. So if you're using these costs for other grants, either COVID related or not even COVID related, you can't use those same costs for PPP. So you have to be very careful with this. The SBA, the Treasury, they've come out and have been very strong with that, obviously, because again, it makes sense. You can't use a grant that you're using these costs for already and use it for PPP as well. You can't double dip on this. So make sure that you're tracking the different grants, how you're using the expenses for those grants, including the PPP as well. And it's going to get more complicated now as well, because now PPP2 is coming out. You might get additional funding for that on top of, which we'll talk about, these employee retention credits as well, which play into it as well. So it's going to get very complicated with it, but it could be a significant benefit to nonprofits as well. So I guess, my long answer, I guess it wasn't a short answer, but my long answer now is just make sure you're tracking all of your costs and how you're using those costs with the different grants and relief and things like that.
That makes sense. We have one more question in a
Sure.
similar vein.
Okay.
Would a permanent outdoor visitation booth be covered?
I believe so. I believe so.
Got it.
So for the qualifying, just for qualifying for, so this is first time drawer. So this is, and there wasn't too many on the call that did not get a first PPP loan. So I'll just kind of quickly go through this, but you can see, the parameters are very similar to the original qualifications. They did add 501c6s as qualifying nonprofits. You can see the qualifications there. It's not the 500 employees, it's actually 300 employees or less. And you can see some of the examples like chambers of commerce and things like that that can qualify now under 501c6. So again, I know I'm here in Westerville, and the Westerville Chamber here now can qualify. So they're going through that process, probably among other chambers as well, because they've been significantly impacted, obviously, by membership. And then, as far as tax exempt organizations, you can see the major change here is the 501c6, right? So still 501c3s, 501c19s still comply, and then now they added the 501c6s. Pretty much everyone else are out. So I have a few organizations that are fraternal organizations, 501c10s, things like that. They were not able to apply initially, and they still can't apply. Second draw borrower. So now most of you listening, here are the qualifications. So, the employee headcount is 300 or less. All right. So, and it's a head count. It's not full-time equivalents. Okay. So it's a head count for just the number of employees you have. The one big thing here is this gross revenue decline. So you had to have sustained a 25% or more gross receipt decline in any quarter of 20 compared to the same quarter of 19. Okay. Now, if you were an operation of all of 19, you don't have to look by quarter. You can look by the whole year. And as long as you are by the whole year, more than 25% or more of gross receipt decline, then you don't have to look into the details by quarter. Okay. So either ones, but that's a big threshold, obviously. I have a good handful of my clients that don't meet this, So now I'll talk about what gross receipts means. And that is something actually the SBA just came out today and provided some information on that. The one item here is you had to have used or will use the full amount of your first PPP loan. And it typically says you had to have used it by the time you receive funding of the second round. All right, so normally, if you think about it, a lot of borrowers receive funding in April, May, some in June. So normally that 24-week period, now it obviously is up at this point. So I would think most borrowers are beyond that right now. They used everything all for payroll and whatever, all their expenses that qualify. So I don't think that's going to be an issue, but if you think that could be an issue, you still have to use all of your PPP loan before you receive funding on the second round. And then there's different calculations for businesses that were not in business the entire year of 2019. If you look into the SBA website, it has information about that. So if that's a business that you weren't in business all of 19, you'll want to take a look at that because there's different calculations for that. You must be in business as of February 15th of 20. I had a question from a client today about that, where they created a new entity and they're moving assets to this new entity after February 15th of 20. Can they apply for that new entity? Can they apply for PPP2? My opinion, you can't. It wasn't in business. Even though you were in business with this previous entity, circumstances change. So I don't feel you can. I did say that you probably want to talk to your legal counsel just to see what their thoughts are. You have to certify for economic uncertainty, just like the first round. You can see all the businesses, the last bullet here that can apply, that we sort of already talked about. So in the act, they actually specifically talk about ineligibility, because in the first round, there was a lot of these businesses that came out and were trying to apply, like publicly traded companies that initially the SBA really didn't feel it was for. So they came out and said publicly traded companies are out. You can see other ones, companies in bankruptcy, things like that. There is some carve outs with that, but for the most part, if you're in bankruptcy, you can't apply. And you can see the others here. The last bullet here, the shuttered revenue operator. If you are considered a venue operator, museums and theaters and concert halls and things like that, potentially, there's another program that you can use, which is this grant, which could be better for those types of organizations and less scrutiny on those types of organizations. So you can't apply for both though, the PPP and this grant, this shuttered venue operator grant. So you have to do one or the other. Doesn't really apply to nonprofits here, but accommodation and food services, there's different rules for them. You know, these are restaurants and hotels and things like that. You can see that they can actually get a larger loan, 3.5 times your monthly payroll compared to the 2.5 times for all other businesses. Third polling question, do you believe you can qualify for PPP2? So that the key is, again, having 300 or less employees, headcount, and having that reduction of the gross receipts of 25% or more, quarter 20 compared to quarter 19. And it can be for any quarter. It doesn't have to be for all the quarters. It can be for any one of the quarters. So if in quarter 2 of 20, and you compare to quarter 2 of 19, you had a drop of 25% or more of gross receipts, you qualify. Any questions, Molly, while we're waiting?
Yeah, there were a couple that came in. Is the 300 headcount per individual business or total corporation?
So it's a buy. So if you have affiliates, you're going to accumulate the affiliates. Okay, so it's all together. So just like where the SBA wants to know if you have affiliates and you have more than 2 million in aggregate, you do the same thing for your employee headcount for that. Now, there is exceptions to it. I have a couple clients that there was exceptions to it where they did not have to. Now, the major exception is, and probably doesn't apply to nonprofits for the most part, but to the accommodations and the food service organizations, they don't have to abide by the affiliation rules. Because that makes sense, right? You think about like, an owner that may have 10 McDonald's locations. They don't have to aggregate that. They can go, apply for a loan individually by each McDonald's. But there's others too as well. So if you want to take a look at the affiliation rules, I would go out on the website, on the SBA website, pull those down, read through those. And then if you still aren't completely understanding of that, or potentially you may have an exception, then either talk to your CPA, your accountant, your legal, even your lender, because I'm sure the lender knows a lot about that at this point because they already gone through this process. So, okay, so a good portion of you can qualify, hopefully. So that's good. That's good. A good portion are not sure yet. So at this point, those that are not sure, I would spend some time with that. Take a look at your revenue decreases and things just to see if you do qualify. So some of the calculations. So some changes with like this second round. The maximum loan is 2 million now. It was 10 million. So the max loan is 2 million. If you're considered a single corporate group, which for nonprofits, it can apply, on the affiliation side, but typically it's that parent sub relationship. If you have a parent sub relationship, then you have a cap of a 4 million of that total group. So the calculation itself, ultimately for most businesses, and probably most here that are listening, is the same as before. It's the 2.5 times your monthly average annual payroll. Okay. You have to make sure though that you're not going over by individual employee over $100,000 on an annual basis. Okay. I've seen some issues with some of my clients where they didn't realize that there's a cap there. There's a cap of annual comp of 100,000 annually. Okay. And it's only for 2.5 months. So if you take $100,000 divided by 12 months times 2.5 months, you get to 20,833, I believe. That's the max amount you can take on this loan, even if someone actually made more than that. The measurement period a little bit different. So now we're past 2020, so you can use 2019, you can use 2020, or you can use a trailing 12 month before you apply for the loan. So a little bit different. As I said to others, with different webinars, if you use 2019, previously for the first loan, you may end up just using 2019 again, and you may actually get the same amount of loan, exact same amount of loan, because you're using the same amount, same period. So that's potential. The SBA provided a memorandum on the maximizing of your loan amount that was issued, I believe, a couple days ago. There's a link here to it. Again, you can just go on the SBA website and pull it down as well, but it actually kind of goes through how to maximize your loan depending on the organization you are. So if you're a nonprofit, it's going to kind of go through how you do that, how you maximize your loan amount. So that would be good to go through before you dig into the details. So gross receipts, big thing, obviously, huge to qualify here is gross receipts. What does it mean? So it's mainly all revenue that you have, okay? Everything as far as products, services, interest and dividends, rents, fees, commissions, anything that you bring in that brings in receipts, you typically, for the most part, will include in your calculations, okay? Now, the SBA just came out today with new guidance on this, and I'll kind of go through that here in a second. And it's specific to all businesses, including nonprofits. Now, revenue does not include net capital gains or losses. All right, so any net capital, gains, realized gains, losses, things, you don't include that. Also, specifically, they came out in the act and said any PPP forgiveness or any income that you're recording for PPP1, the original, you don't include. So you don't include it for 2020. Don't include that. However, they have not specifically talked about other relief. We do a lot of work with healthcare organizations. They received a lot of CARES money with provider relief funds and coronavirus relief funds, other relief. They have not specifically said, do you include this or you don't include this? Now, with the new guidance that just came out today, it may have clarified that somewhat, and we'll talk about that in a second, but I'm not completely sure about that yet. Also, workers' comp rebates. Obviously, there was like 3 different rebates that were paid out during the year. There was a massive one in December. Do you include those? Not sure, not sure. I would think if you do include some of that in the CARES money, a lot of healthcare providers wouldn't qualify that. So again, something that you'll have to take a look at, probably speak to the legal counsel with, talk to your CPA about, talk to your lender about, should we not include it? I would calculate it both ways and see where you're at and then go from there. The definition of receipts is in a CFR. Again, there's a link here in the slideshow here. If you click on that, I'll take you to the actual definition of what receipts are. But I do want to kind of go through this new guidance really quick. So it talks about, the question here is, what are gross receipts for the purpose of determining eligibility for the second draw PPP loan? It talks about for-profit, and then it talks about nonprofit. And it says gross receipts includes amounts received as contributions, gifts, grants, and similar amounts without reduction for the expenses of raising and collecting such amounts. That's big, that's huge, because it talks about grants. It says grants. And so what I'm thinking, it says grants. Well, the CARE Act money, PRF, CRF, are technically considered grants, and that's what they call them. So just on the face of this, I would say you probably need to include it in 2020, but I would not go on record with it. I'm not sure at this point. We need some other guidance. And I was hoping that the SBA would come out and specifically address it, and they haven't yet. So just I think that's still kind of out there that we need to know about. The AICPA is heavy on this. They know that this needs to get, the SBA needs to really decide on that. So hopefully we hear about that soon. It talks about gross sales and receipts from business activities. It talks about gross amounts received from sale of assets. And it also talks about like any expenses that you're netting with these receipts. You don't. You actually add back those expenses. So like in that first item that we talked about, these grants and contributions, if you're doing fundraising activities and you're netting the fundraising activities expenses with some of these contributions potentially, you have to add back that expense. You have to show it gross. That's going to be gross. But you have to be consistent though with the prior year. Okay, so be consistent with both years. It goes back to how the 990 is reported, because on the 990 it talks about fundraising amounts, but then it nets the fundraising receipts with any fundraising expenses. So it goes back to the 990 where, you know what, you just don't show net revenue. You're going to show gross revenue for the most part for some of these expenses. Now, if you're a healthcare provider that has contractual adjustments, then definitely show those net. You're not going to show those gross, but everything else that you're netting expenses with, you potentially will have to probably add that back to your receipts. The guidance that came out today, you'll want to read through this. It's on the SBA website. I didn't have time to pull it onto a slide, but you'll want to read through this because it does talk about if you're going to use your 990 for support, you'll have to follow your 990 and the receipts that you're going to show on the 990. Now you think about it, well, it's only January 21. I don't know what my 2020 990 is going to look like, which makes sense. So you may not use your 990. You may just use your internal statements or something like that as well. So a lot out there right now and confusion and everything, but I think at this point you can sort of try to work through the calculation. And for the most part, all revenue is included, all receipts are included. Things are not that's not included is the PPP loan forgiveness, as well as the EIDL advance that you get. So that's the two main things that they came out specifically, SBA came out and specifically said, don't include. I'm sure there's lots of questions on that, but well, hopefully I have some time at the end here. We have about 10 minutes. Hopefully I have a few minutes to kind of answer some more questions. No major changes with the payroll costs and all other costs to include in the forgiveness, except for adding those additional eligible costs. So nothing crazy there. Documentation for the most part hasn't changed other than the revenue decline. So if you're going to qualify for the PPP2, they're going to ask for support on your revenue. So if it's going to be internal statements, you're going to use that. If it's the 990, you're going to use that. Now it's a little different between 150 loans with 150 or more, or 150 or less, but you still have to, at some point, you're going to have to provide that as support, however you determine your revenue decline overall. That's a big question right now with this revenue and gross receipts. My take on it is, as long as you're consistent in the periods, so if you're looking at 2020 and you're consistent in how you're calculating it with 2019, I think you should be okay. Now, like if you're pulling out certain items in 2020 that you're not pulling out in 2019, you still have to be consistent. So that something like that would not make sense to me. But if you're being consistent with applying it, I think you should be okay. And I think, disclose that to the lender. Disclose that, hey, you know what? I'm applying for this loan. I qualify, and I qualify because I'm not including CARES Act money of provider relief funds and coronavirus relief funds, and disclose that. Be transparent with it. Let them know that. And as long as you're transparent with it, how can they fault you? Because there's really no guidance out there right now for it. So the process, so there is forms out there that you can use. There is a second draw borrower form. Again, most banks right now are like, you go online now and apply. So, but there is a form out on the SBA website. Certifications, again, you're going to need to certify certain things, the gross receipt decline, things like that as well. So nothing like, no major changes there from the first round other than potentially the gross receipts. So moving into this employee retention credit now, I probably want to take a few questions on PPP before we get into this, but I think this is very important as well to spend a couple minutes on it. But Molly, is there any questions?
Yeah, there's a few that came in. Lisa asked, are we allowed to include contractors such as a bookkeeper in the employee headcount who does all of our finances for the organization, but is a contractor and not an employee?
You cannot. So you will not be able to use contractor expenses. So you won't be able to use those expenses within payroll for the loan. Also, you don't include them in the employee headcount as well for the qualification. So on both sides, you don't do that. And that was definitely clarified with the initial loan back in April.
The next question we have is from Britta, and she asks, my nonprofit receives a substantial value of in-kind donations, which we distribute as aid. We do not sell these items. The value of these donations is recorded in our books, but it does not impact our cash flow. Would we need to look at the in-kind values of these donations when looking at the quarterly comparison to see if we qualify?
That's a very good question. You know, I have lots of clients that have in-kind. You know, typically that's an in and out, right? It's a net zero effect, like you said, with cash flow. That's tough. That's tough. If I read the definition of gross receipts, I don't see in kind anywhere. I think what you're going to need to do is you're going to want to look on your 990 and see where you report in kind on your 990. And read this new guidance that came out today, because it specifically talks on your 990 what you include. And it really, what it does, it takes your bottom net revenue and adds in some of those expenses that you're netting with the gross receipts, like fundraising expense and other direct expenses that you're netting. So it's hard to say. I can't answer that yes or no. But I think if you read through the guidance, you'll maybe have a better understanding, and then, you know, kind of go from there. And again, I think you disclose it with the lender. If you're not going to include it, disclose it with the lender when you submit your application, so it's out there, they understand it, and put reasoning why, right? Like the reasoning why is, well, there's no cash flow impact. So it's not affecting my cash receipts. So I think you put it in there, and then you kind of move forward with it.
We have one more question. Will there be a second round of EIDL Advantage grant for nonprofits?
I have not heard if there will be. At this point, I haven't seen anything like that with the second round. But again, just like PPP2, we didn't know this was going to come out. So, you know, who knows? So the employee retention credit, the big thing with this is we did not focus on this initially with the first round of PPP. The reason for that was those that received a PPP loan did not qualify for this credit. They were not able to use this credit. With the new act, the Appropriations Act, you actually can qualify now, and you can retro back to 2020. So you can actually go back to 2020 in your credits. So this is huge for lots of employers that were impacted by the pandemic. The eligibility for this, there's one of two. So you don't have to meet both. It's either or. So the first is if you had a business that fully or partially suspended or shut down based on government orders, mandates, things like that. Okay. I have clients that have, right? So if they have, they qualify. Or if you don't qualify under that, if you kept operating like previously, if you experience a decline in gross receipts of, again, any quarter in 2020 or in 21 compared to 2019, okay? The decline though, in that percentage decline in 2020 is 50% or more, and in 2021 it's 20% or more. So in 2020, I can see that that's probably hard to get to. But in 2021, potentially you can get there with some businesses. So this is significant. I only have a couple minutes here, but what you do is it's based on qualifying wages you pay to your employees. That's what the credit is based on. So if you're a small employer, which I assume probably most here are small employers, and I'll define what that is. It's all wages. It doesn't matter if employees were not providing services, if they were or what, it's all wages qualify. You can also include health insurance expenses. Again, going back to, you can't double dip though. If you're going to use you're going to use these wages for PPP, you can't use it for the credit. So it comes back to, now there's a strategy here now where you may not want to show 100% payroll when you provide for your application for loan forgiveness, PPP loan forgiveness. You may want to show closer to the 60% limit and get the credit on the rest of the wages potentially. So there's a strategy here. That's why it's complicating a lot of the calculations now overall. This is just high level 20 and 20 compared to 21. But it's significant dollars. It's per employee. So if let's just look at 21, it's a $7,000 credit per employee per quarter. So, and it goes through June 30th of 21. So the first and second quarter, if you had qualifying wages for an employee of 10,000 or more, you'd get a $7,000 credit for quarter one and a $7,000 credit for quarter two. Okay. Small employer was enhanced as well. So a small employer now in 21 means 500 full-time employees or less. So that's going to bring a lot of businesses in now that qualify. Not to plug HW&Co, which you probably have already a little bit, but we are doing a webinar Friday on this. We're doing like a tax perspective webinar on Friday in the afternoon, and we're going to talk about this employee retention credit. I've included a link there to it. You can register for it. You can just jump online on the website as well and register for it. But we'll talk about this in more depth. But I think this is very important now for a lot of employers because they may be able to get this now on top of the PPP that they got as well. I'm going to move on from polling question here because I know we have just a couple minutes, not even a minute now. So then other relief. So, you know, the SBA provided subsidy of other SA loan or not SA, 7A loans, and they extended that subsidy now. So for another, so I have some clients that have other SBA loans, which they were being subsidized. They provided a 3-month extension of that. The EIDL that I talked about, the economic injury disaster loans, that's back now, and those advances are back now. Now you have to qualify for it, which is again going back to these reductions in revenue and things. But if you didn't get an advance before, you may want to look at it to see if you can get an advance because it's up to $10,000. So any dollar helps. Or if you did get an advance last time, you could potentially get another advance this time up to the 10 grand as well. So just look at that. We talked about the shuttered revenue operator grants. Likely that's going to go fast. So if you are within that realm, you'll want to take a look at that. And then the Main Street loan programs for nonprofits, that was offered through the Federal Reserve. That's been terminated as of December 31st. So that's no longer. The unemployment, this is more individual side. Unemployment was extended, the supplement for unemployment. Individual stimulus was provided or is being provided. The one item here I wanted to mention, especially for nonprofits, the charitable deduction. So above the line, so non-itemizers of their taxes, there was a $300 deduction above the line that was created for 2020. Well, that was increased to $600 for married filing jointly for 21 now. So they doubled that for 21. So if you're married filing jointly, you can get a $600 above the line deduction now for charitable deduction. So that could be something where you promote that obviously as a nonprofit if you're soliciting contributions and things. Whew, okay. That was a lot. I understand. I can stay on for a few minutes here if you want, if we want to go through some questions. However you want to do it, Molly, just let me know.
Well, thank you so much for speaking to us, and thank you, Denise and HW&Co for bringing this content in real time. I understand there's a lot of moving pieces and things just came out today. So BVU really appreciates you speaking today, Tony, and sharing. And Tony, do you mind if we share your email with attendees in an email post-event?
No problem at all. Yeah, go ahead.
Okay, great. So we'll share Tony's, to be, keep everyone's time in mind. We'll share an email, the recording of this session. And we will, hold on one second. We'll share the PowerPoint as well with the links and the ERC webinar that HW&Co is doing this Friday. And I know you guys as nonprofit leaders, PPP2 is just one of the many things that you are having to think about right now. If you need any support, BVU is here to help. We're having office hours on Thursday this week from 2 to 3. And we will be here to answer any questions that you guys have about other management, board performance, those kind of things. And keep us in mind for February. We have an Ask the Expert, skills-based volunteers from our business sector come together to volunteer their time on tons of different topics. And then our nonprofit leaders breakfast in February is talking about diversity and inclusion in the boardroom. And thank you guys all for coming today. We really appreciate it. We wouldn't be able to do this without you. So take care. And I hope you guys all get your PPP too.
Thanks, everyone.